Here we go with the Dow Jones. Dow Jones has been on fire. One of the things that I would like to talk about on this weekly to all my friends around the world is that we had called for the reversal up here and we got it right here and we undercut that 20 week and we said that was the time it was over. Back on May 22nd it started. We've come back right around that summer period that started. Remember what summer is about, everyone? It starts on 622. Well, this weekly movement started, it's a weekly movement, started on 624. And so far, this summer rally from the counter trend of the first calendar year pullback, which was, this is where that mentality of buy that dip is still in play. And that the 20 week is rising, but we're going to come back up here and hit that wall of resistance. And this is what it looks like. What we are saying, though, is that there's going to be a lot of resistance on the Dow right around 15. Today, this high was, I can tell you, it was 15,137, but 15,000 is going to be 15,385. Right below 15,400. This is where that first calendar year reversal happened. So part of this summer rally that they have going, we're going into an earnings season, it is above the 10 week. The prior week, that was a wall of resistances here. And it wasn't until this calendar week, and today's date is 7/9, and we're, 4th of July has gone by. This was 4th of July week. This was the beginning of the new quarter of the second half of the year right here. So here, MMTs, let's take a look at the daily. I will say that in the short term on the daily, once again, it's going to be right up here at these tops. This has been the best 4-day rally of the whole calendar year, believe it or not, this week. Better than January when we started the whole thing. And the thing about it is, it's a counter rally, money buying, dips. Again, the bond market's been crushed. We called that short a couple of years ago. But here's the thing. Has the money really got in there? No, they're still waiting on the sideline. That's how those people are. They're going to wait. So what the market is telling us in the very short term, that we're going to have some reversal volatility to come back down and test some of these daily moving averages, which is the 20, the bullish 10-day moving average at 15,016 is right here. The pink line there is the 20-day at 15,017. They're converging. So that daily crossover in the retail world of technical analysis is what the bulls look for. So the 50-day moving average, which was that wall of resistance, it's above it. And that 50-day moving average at 15,094. For today's reading, of course, they do change based on daily prices, but we're at the top of the cycle. Now, when we go into the closing bell on the Dow, we can clearly see that we hit a major top. We're right back up here. We know that 14,875 on this 60-minute chart, and we know that this calendar date right here was on, believe it or not, 7/3, right here. And today's 7/9, because it is. And this was the 60-minute movement all the way up to the top, and we're right up here now. So what we look for in the short term on a 60 is where that price exhaustion starts to build, where it would only be healthy. It would only be healthy for the Dow to pull back and test the moving averages in here. And we can certainly see that. The volatility as of 7/9 through the next calendar 3 weeks is going to increase. It's not going to be a one-way volatility to the upside. No, we're having that same upside move as the greater reversal from 1687 on the S&P was. And then this tops up here, this first big top up here at 15, the high was 15,542. And that this high up here was 15,521. And we went down to this low right here of 14,551. So we can see the broader part of the midpoint of the year of what both reversal volatility and bull side volatility to the upside is. So in the short term, we're getting extremely overbought on the Dow.